Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a weekly candle chart of the Qs going back 3 years. And what I'm going to do is I'm going to show our audience here today the weekly candles and how they're shaping up, and then I'll zoom into the dailies to more or less fine tune the signals so you can get an idea of where we're headed next week and even by the end of this month. Now, like I said, this is a weekly candle chart, and if I zoom in here, I'm going to point out some things to you. This red candle is falling within the body of the previous green candle, and that's known as a bearish harami. In addition to that, you can see that there's a longer shadow on top of that candle, which means that the buyers tried to push it up but failed to keep the price action going higher. Now, in addition to that, again, today is the first red candle after a long stretch of green candles. And the whole time that these candles were forming, we can see that the volume has been dropping. Now, there's a lot of people that will argue that volume doesn't matter all that much, but I'm one of those diehard Dow theorists who absolutely believes the volume confirms the trend. And according to Charles Dow, the father of technical analysis, that's the fifth tenet of Dow theory, that the volume must, not should, but absolutely must confirm the trend for that trend to be labeled as a strong trend or one that's intact. So I do believe that we're going to go lower. I have not changed one single bit. My downside targets down here for the Qs are still in place. This is the second week I'm keeping that in place at 297.84. And, a lot of people tend to lose patience with that target. I'm not putting a timeline on it. There's the target. There it is, 297.84. Feel very good about that target hitting. And keep in mind, folks, the thing that you have to understand is that we're looking at a chart. This is not based on opinion or anything like that. It's not, which team is winning, which team is losing. You're right, I'm right. It does not matter. We're simply analyzing the price action. And as you'll soon see, if I go back and take a step back and even look at a monthly chart of the Qs, the bottom line question is this. You're going to have to make a decision one way or the other. You can't play both sides of the market, unless, of course, you're an option trader and you're making money from time decay. So as we look at this chart, you have to make a decision and ask yourself this question. Are we going to go up and break out and set a new high and go up to this high level here? Or are we not going to do that? That's it. That's the way I'm looking at this market right now. Are we going to go up into another bull market and break out into new highs, or are we not? I don't have to say, are we going to go up or are we going to go all the way down here? I'm just looking at this market failing to maintain a level above that moving average, and I'm betting on the downside. That's all I'm doing. Now, as an option trader, I get paid to wait. See, I could be wrong and still make money with a put spread if I know how to trade that correctly. Or if I'm just hanging out here waiting for that downside target to hit, I could keep my position in place and still make money. Now, I'm not going to get into option trading, but I'm just giving you an idea. That's what we're looking at here. Now, the other thing is we are in phase one of a bear market right here. We have a bear market rally, which I've often talked about. Phase two does not kick in until we get this little pivot to the downside. So I do believe that we are heading full speed ahead into phase two. But the next 2 weeks are going to be critical because as we go into September, I'm going to make a bold call saying that we are not going to see a higher high than what we've seen here in August. I think we're going to see a lower high, and that's going to start to trigger phase two. What is phase two? It's basically a duplication of phase one, just like that, except at a lower level. So if I take this whole pattern right here and attach it to here, that is where I think we're going to go. And we have time to get there, but I do not see anything on the charts, nor do I see anything around the world that's convincing me that we're going to go back up into a bull market and set new highs. It's just not in my realm of possibilities at this particular point in time. All right, so that's the Qs. Now, if I zoom into the daily chart, you'll see that we have an absolute pivot point. We have a cross down here on the momentum line. CCI crossed down below the zero line right there. So again, I'm keeping that downside target. I think next week we're going to start to break out below that 20-period moving average. So if you are long, let me just give you some guidance on where I think you could put some risk management principles in place here. If you're long any stock and you're looking at that moving average, I would suggest you put stops below a key support level like this, or below a moving average, or maybe use some protective option strategies to fix that position. So that is the cues. Now, if I look at the diamonds, I'll look at the daily first, and then we'll go back and look at the weekly. You can see we have an absolute pivot point here to the downside. We had a drop in volume yesterday on the way up. Remember I said about volume. Volume confirms the trend. So if the volume is dropping on the way up, like it has over these past 3 green candles right here, that means a weakening upward trend. We have a gap below the market. We have a sell signal on the stochastics. We have a sell signal on the CCI. And a gap all the way down at this level down here right around 305. So my downside target on DIA is still in place at 317.99. I'm not budging. Now look at the weekly on this one as well. Very, very interesting. Now look at your charts, and for those that have studying technical analysis and candle charts, what kind of candle is this right here? What is that right there as I magnify that? That is a shooting star. Shooting stars are long shadowed candles with the shadow on top of that candle and a small body. We saw a shooting star here, a shooting star here, we saw a shooting star here, and now we see another shooting star here. What resulted in the past after those shooting stars? Pretty significant downward turns in the market. So therefore, I do believe we're going to be right on track for hitting that downside target. That is, again, the weekly chart. Now I'm going to switch. Let's go to IWM. Take some more IWM. This is basically the Russell 2000, the small caps. Weekly chart now, remember, what kind of candle is that? That is a bearish harami. It's one of the most bearish. A bearish harami is as bearish as a bearish engulfing. There's a bearish engulfing. There is a bearish engulfing. Here is a bearish engulfing. You see this? So what is that right now? Bearish harami / bearish engulfing family, downside target right there. And look at the oscillators. We have a very wide divergence between that blue line and red line, the K and the D. Very wide. The widest we've had in years. That is extremely bearish. And guess what? We have a hinge on the weekly chart for IWM. So now I'm going to switch back. I just want to show you the cross-reference and how I look at this. If I go to a 1-year daily candle chart, what do we have? There's the pivot point. We had a drop in volume yesterday, and even on this high, see that very small little green candle right there? We had a low volume right prior to that, telling us the upside trend was weakening. And what do we have here? Interesting. We have a red candle on higher volume. What does that increase in volume mean on the way down? Well, you might have guessed it. It means that the sellers are becoming more motivated. Now, Monday, I do believe that the CCI down here is going to cross, and that would mean about 2 to 4 more days to the downside. That's what we typically see when the CCI crosses that zero line. It generally moves for 2 to 4 more days in the direction of the cross. So if we're crossing lower, I'm expecting 2 to 4 more days of downside activity. Downside target, again, has not moved. I'm not moving it. We will hit that at 179.75. 179.75. Now let's take a look at the spiders, and then I'm going to start with the daily because I'm flipping back and forth. Go to the daily, look at the spiders, same thing, same pivot point. Increase in volume on the way down after a long stretch of green candles right there. So the green run is come to an end, at least for now. We have a red candle right there, increasing volume after sell signals on the stochastics happened earlier in the week, and the CCI crossing with a sell signal right there. We have gaps below the market. Now let's switch to, guess what? There we go. Weekly chart. What do we have? Interesting. Shooting star, bearish. Like this shooting star, bearish. Bearish harami, again, akin to bearish engulfing. Bearish engulfing. See that? We have right at these highs, very similar bearish candles. Remember, that's a weekly chart. Look straight down below. What do we have? First red candle after a long stretch of green. Look at that. Wide divergence between the K and the D. That's the rubber band effect, as I call it. When you have the price moving far above the moving average, or you have the K moving far above or even below the D, chances are those lines are going to snap right back together again and then eventually develop another signal along the way. So that's what the spiders are looking like. Extremely bearish all across the board, right in line with all the other major markets on the weekly candle. Now I'm going to flip to the VIX. Talk about the VIX quite a bit. Look at this one. This is pretty impressive. For the first time I have seen this in years, we have 10 red candles in a row. Count them. 10 red candles in a row. And look at that small little doji of a candle on the weekly. Pivots are forming on the oscillators on the way up. And now if I switch to the 1-day candle, what do we have? We have this inverted hammer. That's bullish. We're very close to crossing the momentum line there on the CCI, and I'm not moving that target one bit. That stays in place. VIX to the upside at 28.61. And, I'm not trying to be right. I'm not trying to, prove anyone else wrong. I'm just laying out the facts. And with that, I have to talk a little bit more about the VIX. The VIX is more or less known as the fear index. It's an indication of what the emotions in the markets are. Are investors complacent? Are they getting heated up? And I want to point this out to you because as I've been doing in the past weeks, I want to show you some of the things that I'm seeing that fall right in line with my analysis. This is a compilation of what's happened in any given month during a year since 1946 during a political cycle. We are currently looking at this red line. We're in the second year of a new Democratic president. And therefore, if you look, we came out of the June lows. We rallied right up. Where are we on this chart right now? Here's where we are. I don't know if you could see that. Let me magnify that for you. That's where we are right there. The next couple of weeks are going to be very interesting. I'm already forecasting lower. Well, that's what history has been showing exactly at the same time in history during this month of August. And then what could we expect right up until election? Right here. Which, by the way, folks, would be a lower low than what we saw in June. So that's a little bit of data there for you showing historic values since 1946. It's just 1 year in an election or midterm or whatever it may be, overlaid on top of the next and the next, and they compile that, put it on each month, and here we have a pretty strong record of what could very well happen here right up until the midterm elections. Now, another thing that I was looking at, and again, it goes back to that question. Either you're going to believe that we're going to go and set a new high or we're not. That's it. That's the simple question. Now, inflation. We heard about this Inflation Reduction Act. Well, almost immediately it became the Inflation Expansion Act. This is one of the biggest ripoffs of the American public that you're going to find when they gave the credit to consumers who are thinking about buying an electric vehicle, gave them a $7,500 credit. What happens? Ford immediately raises the price by $8,500. It's criminal, absolutely criminal. What is that going to do to inflation? It just did it. Before the bill even was signed into law, they just increased inflation. There you go, right there on vehicles. So keep that in mind. Answer the question, do you think we're going to go and set a new high or not? That's it. It's just the or not side of that question that I'm favoring. Here's another thing. Keep an eye on the property debt crisis. I've been saying this for months. Keep your eye on China. Keep watching China. There's a Bloomberg headline that came out last month, but here's the follow-up story to this. This just came out earlier this month. They are talking about China facing a major mortgage loss that's going to make our 2008 look like kindergarten play in comparison. And this continues to get worse. It's even bleeding off into the U.S. market. This just came out today. And you can see that this is Mortgage Bankers Association showing this 1-year trend of the mortgage market slowly dropping 1 month after the next. And this is giving us an indication of what people are thinking about with regard to buying new homes or taking out a new mortgage. People are basically sitting on their hands. They're not willing to take out any more debt. They're kind of toning that down. They're thinking, maybe I'll just stay put. I'm not going to go move into that new house or whatever it may be. They're just staying put, becoming a little bit more mindful of their dollars. Here's one. Now, remember, core inflation does not measure fuel, nor does it measure food. This, by the way, is the crude oil chart /CL. This is the light sweet crude that trades on the exchange. And again, I talk about what caused prices to go down. Well, they opened up our emergency petroleum reserves and started selling it for political reasons to try to get the prices down before election. Let everyone know everything's okay, inflation's under control. But that game's going to come to an end very quickly because you could only sell so many barrels out of the emergency petroleum reserves before you can't do that anymore. And now Russia's cutting back on their energy supply to the EU. And what do I think is going to happen here with crude? I think it's going to go right back up. So if you're looking for a bull market, this is where I'm going to look. I'm going to look in energy. I'm going to look in the oil sector. I'm going to look in natural gas. I'm going to look at opportunities to possibly take long positions while the rest of the market is falling. I'm just giving you an idea of that because this is the longer term trend line. And this is a weekly chart. Again, as I zoom in right there, what is that? That is a bullish hammer, very bullish candle that follows a bullish harami that is bouncing exactly off a trend line. And not only is it bouncing off the trend line that I believe leads us higher, but it's bouncing off of a line as well that was a role reversal, former resistance broken, turns to support. So this is a double bonus of a support level for crude at this particular point in time. Now, as prices go up, what is that going to do eventually to inflation? It's going to lead us to higher inflationary numbers down the road. You cannot avoid that. So that's something to keep an eye on right there. Now, one other thing, to go back to China, this is very interesting. This just happened yesterday. I'm looking at the weather and I'm thinking, boy, we have it bad in Florida. Well, heat waves in China causes whole factories to shut down. That's not exactly going to help supply chain issues, especially with car batteries. Notice this. Lithium output is going to slow down, right? Batteries for cars, electric cars are going to slow down. Prices are going to start going up again as maybe demand increases through this new, green energy law that's being passed. And guess what? That's going to make it much harder for people to buy electric cars, don't you think? That'll put more of a kibosh on that whole sector, at least at this point, the way that looks. Now, finally, I'm going to leave you with this one. I track military, as many of you know. I've been doing this for many, many years, and I found this. This is from the Chinese Air Force, basically, and they came out with this alert. Look down at the bottom right here, where they put out radio warnings that were issued, and air defense missile systems were deployed. Now, this right here, if you're a pilot, this is like a military operations area, MOA, as they call it. Right, so this is a military operations area. If you were a private pilot and tried to fly in there, you'd be shot down or escorted out very quickly. So what does that mean for container ships? Well, then obviously not flying in the air, and they're not going to be interrupting these patrols right here. But when you have a hot zone like this, the cargo ships tend not to be as active as they normally are. So I think over time, this will ultimately put a crimp in the imports, exports coming in and out of Taiwan. So keep that in mind as well. One other thing before I wrap up, I have to be careful what I ask for. Holy mackerel. I was asking for questions and comments, and I was thanking everyone. There was no way I could keep up with the number of questions this week. And I'll try to continue to answer questions as they come in, but your comments are appreciated as well. It doesn't take much for me to respond to a comment. It takes a lot more time for me to research or answer a question. So, but keep that in mind. If you don't get your question answered right away, it might take me a couple of weeks, but I'll try to get to it. And again, thank you so much. We're averaging very close to 10,000 viewers a week. That's all because of you. That's all because of you liking it, sharing it, commenting, subscribing. Hit the notification bell, and you'll get notified when I put these out. I really enjoy what I do. As some of you know that already from working with me in the past. I really, really enjoy it. I love trading This week, just to give you another freebie, a lot of people asking me, hey, what do you think of silver? What do you think of silver? Well, I sold out a part of my silver position. I told this to our members. I sold out of 15% of my silver here when it filled this gap. On this pivot point, I sold out of another 15%. And then on the shooting star back here, I sold out of 5%. My original target was to buy it all back in on this gap fill. I am completely back in on this gap fill, and I'm looking for a possible another rally in the silver market. I trade in and out of this quite often as I accumulate the underlying physical metals. But this is a fun one for me. I've been doing this. It was the first commodity I've ever traded in my life when I came onto the trading floor in 1982, and I have not lost favor at all with this. I find it to be a lot of fun. It trades very technically, and I had some people asking me about that. So keep your eye on the silver markets as well, and really make sure that you're following good risk management principles, because as things heat up emotionally for the markets, that it could tend to cloud your judgment, right? You want to follow the charts, follow the signals, protect against any possible down move against your positions, and be able to sleep at night knowing that you're going to have enough money to trade the next day. So that's it for now. You have a great weekend. We'll talk to you soon. Bye-bye.
Hello, John Najarian here. If you want to trade like a rebel, if you want to party like a rebel, well, you got to come to RebelCon 2022. It's going to be in Dallas, Texas, at the fabulous Four Seasons Resort. We start the 21st of September, go until September 24th. It will be more fun and more live trading than we've ever done before. That's why it's called RebelCon 2022. We're going to have barbecues and double the amount of live trading. So if you want to book that now, make sure you do, because the guest speakers, as soon as we announce those, this thing's going to be sold out. It's going to be something you do not want to miss. Limited to 250 people. Sign up now for RebelCon 2022 at the Four Seasons in Dallas, Texas.
Welcome to the rebellion.